So we got some key economic data this morning, guys, that I want to break down in this video. So let's just dive into it. If y'all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks from Moomoo. It is free money. Link down below. We'll talk more about that later. And now let's dive into it. So the first number we got was the average hourly earnings month over month, which we can see here increased by 0.3%, which was right in line with the forecast and a little bit above the previous number from last month, which was 0.2%. And this pretty much shows the change in the price businesses pay for labor, excluding the farming industry. And this is actually a leading indicator of consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumer. So again, we got a 0.3% reading this month, which was right in line with the estimate, but it was higher than the previous month. So again, we are seeing a higher change in price businesses pay for labor, which that could be passed on to the consumer. Well, it will be passed on to the consumer, right? That's how it typically works. So that's what we got for average hourly earnings month over month. And we got the non-farm employment change, which we'll talk about more here in a second. We got 236,000 was the actual number. The forecast was 228,000, so it came in hotter than the estimate there. And the previous number was 326,000. You guys can see it right here. And this pretty much measures the change in the number of employed people during the previous month, excluding the farming industry. And job creation, of course, is a very important leading indicator of consumer spending, which amounts for a majority of overall economic activity in the United States. As you guys know, most of the GDP is made up of, just people consuming, buying products, buying a bunch of services, right? And if we come over here, we can see a little bit more in depth. And I know this is a lot of writing here, guys, but bear with me. We'll see more in depth here of the different, what different jobs were added in different categories and so forth. So again, total non-farm payroll employment increased by 236,000 in March. You guys see that right up here, compared with the average monthly gain of 334,000 over the prior 6 months. So that's actually a good chunk under the last 6 months, or the average monthly gain over the last 6 months. And in March, you guys see right here, employment continued to trend up in leisure and hospitality, government, professional and business services, and in healthcare. We can see exactly, if we come down a little bit more, the different numbers in these different categories. So we can see leisure and hospitality added 72,000 jobs in March, lower than the monthly average of 95,000 over the prior 6 months. And most of the job growth occurred in food services and drinking places, where employment rose by 50,000 in March. And employment in leisure and hospitality is below currently its pre-pandemic February 2020 level by 368,000, or roughly 2.2%. And if we come down a little bit more, government employment increased by 47,000 in March, the same as the average monthly gain over the prior 6 months. And overall employment in government is below its February 2020 level by 314,000, or by 1.4%. And let's come down a little bit more, guys. There's more. Employment in professional and business services continued to trend up in March, up 39,000, in line with the average monthly growth over the prior 6 months. And within the industry, employment in professional, scientific, and technical services continued its upward trend in March, plus 26,000. And there's more. Look at this. Over the month of March, healthcare added 34,000 jobs, lower than the average monthly gain of 54,000 over the prior 6 months. And in March, job growth occurred in home healthcare services, 15,000, and hospitals, roughly 11,000, while employment continued to trend up in nursing and residential care facilities, up 8,000 jobs. And let's see, where do we lose jobs? It looks like here employment in retail trade changed a little in March. It actually came down 15,000. Job losses in building material and garden equipment and supplies dealers, and in furniture, home furnishings, electronics. So it looks like a lot of, we're losing some jobs in the real estate, jobs dealing with real estate, right? And appliance retailers lost 9,000 jobs, which were partially offset by job gain in department stores, plus 15,000. So that's a quick little rundown here, and it looks like if we come down a little bit more, in March, average hourly earnings for all employees on private non-farm payrolls rose by 9 cents or 0.3% to $33.18. Over the last 12 months, we can see here average hourly earnings have increased by 4.2%, and in March, average hourly earnings of private sector production and non-supervisory employees rose by 9 cents or 0.3% to $28.50. And we can't forget about unemployment, guys. Let's go back over here to Forex Factory and we'll see exactly what that number is looking like, because you guys probably know Jerome Powell, he's trying to get the unemployment rate to go up. He wants the job market to slow the heck down, and you guys might be surprised at this. I'm not really surprised, but the unemployment rate actually went down a little bit. If you guys remember, it was at 3.6% last month. The previous month, I believe, I forget exactly what it was before that, but it is now 3.5%. So it came down 0.1% from last month, which we can see here. Of course, the unemployment rate is the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So that again creeped down a little bit from 3.6 to 3.5%. I'm actually very, very excited to see how the stock market reacts to this. Of course, the markets right now are closed because of Good Friday. Happy Good Friday to everybody out there. And we'll see how Monday and the rest of next week ends up playing out. And although unemployment is generally viewed as a lagging indicator, you guys can see right here, the number of unemployed people is an important signal of overall economic health, of course, because consumer spending is highly correlated with labor market conditions, and unemployment is also a major consideration for those steering the company's monetary policy, which you guys know Jerome Powell, he sure is steering that ship, guys. He sure is making a bunch of decisions based on this data. And I almost forgot to mention this, guys. I almost forgot. Next week on Wednesday, it's going to be a big day for economic data. Next week's going to be huge overall. We have the CPI data coming out on Wednesday morning at 8:30 a.m., which is projected to be 0.2% on the month or 5.2% annualized. That's going to be a huge drop from what it was last month, which you can see here. Last month, it was 6% annualized and 0.4% on the month. So we have CPI coming out. We also have the Fed minutes, I believe, on Wednesday as well at about, 2 p.m. on the East Coast. So yeah, if you thought this week was big, next week's going to be even bigger, so get ready. What do you guys think? Let me know your thoughts down below in the comments. I just wanted to make this video very quickly. The markets are closed today, so not much content to make, but this definitely was worth a video. So if you enjoyed it, hit the like button, make sure to subscribe, and don't forget to get up to 15 stocks from Moomoo. If you guys want free money, I mean, who doesn't like free money? Use that link down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more free shares totaling 5 stocks. And if you deposit at least $1,000, you get another 10 stocks totaling 15 free stocks. So use that Moomoo link down below. It also helps out the channel. I appreciate you guys as always. Get your 12 stocks from Webull as well. Check out the Patreon if you want. All of those are down below. Cheers. I'll catch you guys in the next one. Peace out.